Good afternoon, everyone. This is Eric Colombo from Cyber Trading University. Today we have a special presentation with Adrienne Toghraie from Trading on Target. It's today's closing bell webinar. Let me just get a quick chat back. Let me know if you guys could hear me all right. All right. There we go. Just wanted to make sure my audio is working. So just before we go into the presentation, a little bit about what Adrienne's going to be talking about. She's going to be speaking all about losses. It's the title of her webinar. It's something we know all too well as traders, and something really important. Something we definitely have to overcome, and we all experience it as traders. It's all part of the game. So she's going to be talking about 15 reasons traders lose money in the markets, 5 methods for overcoming issues of loss, your options after a loss, how to create positive anchors, 5 principles of learning behavior, and methods for change. So it should be a really interesting webinar. I know we talk a lot about technical trading strategies and all about entries and exits, but not a lot of times it's a harder topic to talk about the psychology and the psychological aspect and the emotional aspect of trading. So Adrienne, if you're there, take it away.
Can you hear me, Eric?
Yep, I hear you just fine. Sounds
wonderful.
Good. All right.
Thank you all for being here. I really appreciate it. There's a little bit of an echo. It just went away. I think it was when 2 mics were on. Thank you, Fausto, and all the guys at Cyber Trading University. I really appreciate being in your room. As Eric said, we'll be talking all about losses. Please save your questions till the end because Eric's going to be asking me the questions and I will answer your questions. And please make it about the psychology, the discipline part of trading. It's been said that good traders know how to generate profits, but that great traders know how to handle losses. Those of you who have traded for many years know the great truth to be found in this bit of market wisdom. Even novices know that the disposition of losses is much more important than the ability to generate profits. Naturally, the ability to take losses well without the ability to produce profitable trades is still a losing proposition. However, in comparative terms, the trader who can generate reasonable profits while knowing how to cope with and limit losses is the trader who will consistently outperform most others. Neuro-linguistic programmers such as myself tell stories as examples of what we're teaching. Sometimes a simple story can drive a point better than lessons or statistics. And by the way, NLPers is a modeler of success who passes on that knowledge. So if I wanted to teach you how to play golf and better than you're playing it right now, I won't teach you the technique, but what I'll do is teach you the psychological part that great golfers use in order to be successful. A trader by the name of Beverly had the kind of life that most of us would envy. She never experienced hardship, and the minor losses in her life didn't hang on to taunt her when she became a trader. Beverly worked at the Twin Towers. After 9/11, this incredibly profitable trader couldn't deal with even the smallest of losses in trading. All losses that haven't been dealt with effectively in your life will affect your trading. Inasmuch as losses go with the territory of trading, they're unavoidable, inescapable. There's no trading system, method, technique, or approach which avoids losses entirely. The more trades you make, the more losses you'll have. The longer you trade, the more you'll be exposed to the greater probability of inappropriate management of losses. The effective disposition of losses should ideally be, in the beginning, a totally mechanical procedure. However, due to the fact that many trading approaches don't have mechanical rules for taking losses, there's always the danger that losses won't be cut short. This is precisely where trader personality comes to play. It's probably true that there are born losers, and while it's true that there are specific personality traits associated with a born loser, knowing these traits won't necessarily help us. By now, all but the most uninformed of traders are aware of the qualities that are important to trading success, but understanding the inner workings of certain trading behaviors may be, depending upon your orientation to the psychology of trading, essential to positive change. If you're a trader, you've experienced loss. The trick is in recovering from the loss quicker, stronger, wiser. The alternative is to become so frightened of future losses that it impairs your trading, creating bigger and more painful losses, or to become pessimistic and depressed and lose confidence and hope. I worked with Beverly on reframing her connection to the loss she had of friends and colleagues. We also worked on transforming the terror of almost being killed herself. I'm happy to report she is back to earning the profits she achieved before the terrorist attack, but has a new focus. She gives a percentage of her profits to those who have faced dreadful losses in the name of those who were lost in the towers. Before we look at the strategies for overcoming losses, we need to identify the many ways traders have found to create an environment of losses. Let's realize something. Eric, I'm not able to move my screen for some reason. I'm going to turn it off and turn it back on again.
Okay.
Hopefully it'll work now. Ha.
There we go.
So I thought it was, I thought I was changing my screen, and I wasn't. Good traders know how to generate profits. Great traders know how to handle losses. Okay, so reasons traders lose money in the markets. Plunge headlong into markets with no plan of action. This is an excellent way to lose money and to lose it quickly. Why make a plan anyway? Would you drive from New York to Los Angeles without a map, without a GPS? When you're trying to get there in a week, you could. It would be exciting, and you might be lucky enough to reach your goal without too many errors, but each error will cost you some time. If you trade without a plan, your chances of success are slim to none. Yes, you may be one of the lucky few who hits the first time, but the odds are minimal. Without a plan, you'll find yourself buffeted about by the winds of chance and the opinions of others, the persuasions of newsletters and advisors, and the panderings of brokers and the bias of the media. Your responses will be whimsical, but the greatest danger is that you'll not learn anything from your behavior. If you're unaware of what you did wrong, the consequences of your actions will not be deadly apparently to you. You may run out of money before you learn your lessons, but what exactly do I mean by a plan? Here's my definition of a trading plan. Everything that you would have in a normal business plan that you would need for any entrepreneurial endeavor. Included within that plan, you need a strategy, which includes a set of indicators that permits a relatively objective evaluation of the market, entry and exit, as well as risk management. This could mean that you're following computerized trading system signals from a chart, a newsletter, astrology, a random number generator. Regardless of where the input comes from, it must be traded as closely as possible and as often as possible. What I recommend is that you employ a mechanical trading entry system in the beginning and be more flexible in the exit system eventually. In other words, I advise against rigidity, against inflexibility following any plan. But to stray from a plan, you must have a plan at the outset. Now, eventually, when you're consistent in following a set of rules for a period of time, you might be able to adjust your rules to include what I call an intuitive filter. This is when you'll have the approach the ranks of master trader. Excuse me. But I warn you, if you haven't handled your psychological issues, you should never go beyond a fairly mechanical plan. Number 2, too much information. Subscribe to and read as many publications as you can, watch the television, business news, and follow the consensus of opinion. This is a surefire way to get confused and lose money while you're doing it. You'll find that most of your best trades are not only contrary to what you have read, but also contrary to what you want to believe. If you follow a trading advisor, do so without second guessing. Remember that the more opinions you process, the more confused you'll get. Not enough capital. Start off with a small amount of capital and build up. Wrong. The facts show that the less you start with, the less likely your odds of success. If you don't have enough capital to sit through a string of losses, you'll not be there to get in on the big winner when it finally comes. Pick tops and bottoms. Tops and bottoms don't happen too often. Trying to pick them is like trying to find a needle in the haystack. You'll find seasonal lows and highs with good degree of success. However, you'll always best getting into existing trends and riding them. You're better off trading with the established trend as opposed to trying to pick a change into trend before it happens. Get out of winners quickly and ride your losers. Many traders get anxious when they are in a profitable position. They have the urge to take the money and run before the market takes it back from them. When they're in a losing position, they are patient and remorseful. They get mesmerized into a state of no action, hoping that the markets will reverse in the trend. They ride losers for a long time and exit profits quickly. This is another good way to lose money in the markets. Buy a better trading system. It's not the system that makes profits, it's the trader. In the hands of a poor trader, a good system is useless. Spend more time developing yourself as opposed to your system, and it'll be time well spent. Simple and inexpensive systems often work best. Every now and then you'll run across an expensive system that holds promise. If you decide to buy it, and if you are convinced it's worthwhile, you must also make a commitment to trade it according to the rules. If you can't do that, don't waste your time and money. Spread your positions to avoid taking losses. This little trick rarely works. In fact, it most often puts you in double jeopardy. It's just another way to generate commissions and losses. Action trading. Get into a trade for the action. Most traders don't understand themselves. In fact, most traders are uncertain about their goals in the market. They tell you that they're looking for profits, but their behavior will convey another message. Many traders trade just for the action because they are addicted to their adrenaline rush. Some traders enjoy telling their friends that they speculate in futures, and others yet trade just to legally satisfy a need to gamble. Trading for the wrong reasons. Finally, some traders trade just for the challenge. Although there is probably nothing wrong with most of these goals, the fact is that most traders don't know that these are in fact their goals. They don't understand their motivation, and in failing to do so, they can't direct their intellectual energy in the appropriate direction. Self-understanding facilitates attainment of goals by highlighting the best vehicle toward the desired end. Furthermore, the failure to understand oneself will obscure the reasons for losses. Hence, the learning process is either slowed down or totally ineffective. Since it is the function of losses to educate, the value of losses won't be fully effective if it's at all beneficial. Remember, trading is a trip of discovery about yourself, and the best way to learn about yourself comes from how you deal with losses. Not enough education. Most traders don't understand the markets. How could that be? Very easy. Most speculators are self-educated. They either read a book, glance over a book, or they have picked up their education along the way. This might suffice for a general understanding, but it won't tell you at all all you need to know. I believe that all traders should start with the Jesse Livermore, Edwin Lefebvre, book, Reminiscence of a Stock Operator. This will give you a foundation of the markets. You'll learn how markets began. You'll learn such things as how orders are filled, how the bid and offer function on the floor, the role and function of different types of markets. These are all important in the trader's repertoire since they make human error less likely and they promote a solid base of operational procedures. And it gives you an understanding of the pulse of the market. Disorganization. Many traders aren't organized. They have systems, indicators, charts, signals, newsletters, quote machines, and hotline recommendations from various advisors. But few traders have coordinated all of these into an operational, organized, cohesive set of operating principles. Speculation and investing are a form of doing business. Success requires order and direction. Would you fly without a pilot who had no flight plan or safety checklist? No rules after a drawdown. Many traders don't stay long enough. How many traders are able to emotionally accept more than 3 consecutive losses in the market? Many trading systems inherently require the personal and financial ability to sit through 5 or 6 or even 7 consecutive losses and up to 25% dollar drawdown. It's during these periods of drawdown that most traders err. When you do have a series of losses, it's important to ask the question, is this within the parameters of my system? And have I been following my rules to the letter? Stay in the game too long. On the other hand, some traders don't know when to quit, when to admit that their system just isn't good enough or they aren't using it correctly. Such traders fail to the tune of many dollars, and they do so repeatedly. You need to know when your system isn't working and when you're not working. Believe risk is for other traders. It would appear that there are many trading systems, methods, and timing indicators which have profit potential. Those who have developed and tested trading systems know that although profitable systems aren't easy to find, they exist. But as the Zen philosopher said, every front has a back, and the bigger the back, the bigger the front. Simply stated, every mechanical trading system, no matter how well it performs in hypothetical testing, has its downside. The greater the rewards promised by a system, the greater the risk exposure in most cases. The simple fact of the matter is that trading involves risk and that there's no system, method, or indicator which has ever been developed which does not entail risk. You accept this as a fact of trading life. As strange as this may sound to you, many traders don't understand the true meaning of risk. They feel that risk is for other traders. Only when controlled with the reality of risk and loss do they understand its full impact. Only when the threat of loss is real can they respond. Trade without the necessary skills. After years of studying, I've concluded that trading systems, methods, and indicators comprise perhaps 25% of the total equation for success. 15% is luck, and the remaining 60% depends upon a trader's response to the system and the markets. All traders aren't created equal when it comes to trading discipline. Some are more reactive than others, some more tense than others, some are too confident, others too sensitive, and others too detached. It's the response of the trader which constitutes the single most important variable in the equation for trading success. Too many traders lose in the markets simply because they don't possess the necessary skills to trade effectively. The fact is that most traders have to learn to fail their way to success because they choose to take shortcuts that don't work, skimp on education, and overcoming their issues. If they have the money, passion, and fortitude to get through this tedious, unprofessional induction into the trading business, then they might be ready to make the right choices. Perhaps some of you can relate to Trader Charlie. Charlie was an instant gratification guy. He was successful at everything he ever attempted. Excuse me. until he decided to become a trader. He purchased a proven system from a top trader for $50,000, and he hired another trader to educate him in the markets for an afternoon. At first he thought he was the golden goose until he followed the system perfectly and he had 3 drawdowns in a row. That was enough to rattle him out of being sure of his system and sure of himself. After that, he managed to do everything wrong. So now let's look at methods for overcoming loss issues. There are many methods to handle issues dealing with loss. We will first start with good behaviors to give you the skills and strengths that help you counteract the losing behaviors that I just outlined. They can't be developed instantaneously, but given the time that you need to develop them, they'll achieve results. I'm sure you've heard this many times. Be consistent. Consistency covers a multitude of behaviors and includes everything from placing orders to enter and exit by the rules to keep your system data updated as required. Consistency is a quintessential aspect of all learning. In order to achieve consistent results, consistent behavior is necessary. If you don't follow a system with consistency, you'll never know whether the system works or not. You'll only have the hypothetical results, and they'll not mean much to you. Consistency will give you the feedback you need in order to be successful. Whether the feedback is profit or loss, it's still important feedback, which relates directly to the behavior. Learn to develop appropriate emotions. Inappropriate emotions are the chief enemy of the speculator, always boring from within, said Edwin Lefebvre, alias Jesse Livermore. Too much pessimism will cause you to either get out too soon or to not get in when you should. And too much optimism will cause you to hold on when you should be getting out and possibly reversing position. Emotions can be controlled by the use of relaxation techniques, consequently readjusting your internal or external focus. Be persistent. There are few traders who have the persistence to trade their system by the rules once they have experienced more than 3 consecutive losses. If you know your system, however, you'll know that it may take up to 7 or 8 consecutive losses before getting back on track. Persistence is the ability to go with the system through bad times as well as good. When I was in sales, I would average 2 sales for 48 rejections. Each rejection would lead me closer to those who would give me a sale. With this attitude, I earned more than $150,000 per year when I was in that business about 25 years ago. Contrast to this to people sitting alongside me who were earning $30,000 per year doing the same job because they weren't willing to accept rejection. Be honest with yourself. The eminent Russian philosopher Ouspensky claimed that self-discipline was the root cause of virtually all personal and interpersonal problems. When it comes to trading, he's most assuredly correct. If you can't be honest with yourself about every aspect of your trading, you'll refuse to break the rules of your system, or if you do break the rules, you'll do so under very well-defined circumstances. Self-honesty is one of the most valuable qualities a trader possesses. Learn from losses. Every trader has dealt with loss, whether they're trading related or not. Loss is at the heart of every painful experience in our lives, even the smallest ones. If we reflect back on all the traumas and difficulties of our lives, it becomes clear that most of these events were related to a loss. For example, losing a race at school is indeed a loss. Experiencing the death of someone you know is a loss of a relationship. And experiencing an embarrassing moment in front of others is painful because it results in a loss of self-esteem. Even when we make choices such as moving to a new location or changing jobs, the result is the loss of familiar faces and experiences. When these events are thrust upon us, they're even more painful. There are a variety of ways that we can perceive losses. They can be stepping stones to major breakthroughs. Losses can result in an awakening of who and what we really are, and can realign our values so that we remember that what's really important is basically losses can be lessons and turning points. Although the painful experiences are always low moments in our lives, at the time they occur, when we look back at some of the greatest joys and successes of our lives, they can often connect us to a loss. If you look for the silver lining in a loss, in most cases you'll find it. When I've interviewed some of the best traders in the world, I've always asked them about the roots of their greatest success. Nearly always they say that a big loss caused them to make the transition from being a mediocre trader to doing what it takes to become a great trader. So let's get back to instant gratification Charlie. I met Charlie through a client. At first I didn't want to work with him because of his arrogance and self-righteous behavior. I suggested other people that would be happy to work with him. This made him want to work with me even more. His friend gave him some advice about how to approach me, but even with this, I insisted that he go through a few hoops before I would work with him. It took 6 months before I would set up an appointment, after which he said, "I guess I've been working with you all the time and didn't realize it until now." And he was right. If I was going to get the best out of Charlie, he needed to allow me to coach him towards disciplining himself. Patterns of behavior continue indefinitely unless they are interrupted. What it takes to interrupt a pattern is often something that gets our attention. For a trader, there's nothing that gets his or her attention as completely as a major loss. If the pattern of expected trading performance is interrupted by a major loss, the trader has 4 options. Review your methodology. The first option a trader has is to look at his present methodology and make the decision to make some changes. In this scenario, loss is then perceived as a lesson and an opportunity to improve. Treat losses as a necessary step. The second option is to treat losses as an important or necessary step in the achievement of one's goals. For a trader, this mindset would have him responding to a loss by saying to himself, "This loss is one more step toward getting the best possible overall outcome. Losses must happen on the way to gains. Therefore, this loss brings me one step closer to my next gain." This is particularly true for salesmen who know that they will receive a certain number of no's before they get a yes, just like the example I gave you before from my own experience. Perceive negative thinking as a cause for loss. The third option is to perceive a loss as proof that the negative thinking behind it is the cause, i.e., trading is too difficult for me, or it's hopeless, or my system is no good, or my life is all about failure and loss. Observing this could lead to a different choice and therefore a new positive direction. Retreat or give up. The fourth option is that losses can also mean, for some traders, retreating, submission to being a victim, or just plain giving up. I'm going to tell you about a story of a fellow that I worked with a long time ago. And he was losing because he wasn't making as much money as he could. And the problem with him is that he was working 16 hours a day in trading. When I met him, he had this nervous tic. And his wife told me that he never spends time with the children. He never spends time with her. And he was basically a nervous wreck. He was making $100 to $200 a day in trading, very steadily. So before I worked with him, I said, "I want you to do what you're doing now, but I want you to do that in a 6-hour period." And he says, "Well, it's impossible with my system." And I said, "Well, You make it possible. Well, before I even met him, he increased his uh, ability for income to about $500 a day. Then I worked with him, and the last time I spoke to him, this was quite a while ago, he was bringing in $2,000 to $4,000 a day, and I told him that he couldn't work more than 2 hours a day. His wife loves me, the kids love me because they got their husband and father back. So losses are not only losses in the sense of losing money and not making money, that losses can be from not optimizing your potential. Let's look at the strategy for dealing with future losses. Use loss as an opportunity to expand rather than having the loss deplete you of your resources and strength. So what can you do for yourself to change these conditioned responses that I call anchors? When a major loss takes place in our lives, we tend to associate certain parts of the experience with the particular loss, by extension to all losses. These associations become anchors, which are unconsciously tied to that experience. These anchors, when they reoccur in our lives, take us back immediately to the feelings and thoughts associated with the original experience. For example, when Patrick was a child, his father worked for a company that moved him on a regular basis. By the time Patrick had finally fit into his new school, made new friends, and started feeling successful in his new life, his entire world would come apart. It was time to move again. He lost everything he had worked hard to gain. The anchor for loss for Patrick was success and stability. As a trader, whenever his trading had reached a high, stable level of profit, Patrick became uncomfortable. Without knowing why, on a conscious level, Patrick was waiting to lose it. All his unconscious mind would then complete the pattern by creating the losses he was expecting. If every painful loss we have experienced in our lives has its own anchors, we will soon be weighed down by negative anchors like Jacob Marley in The Christmas Carol, who was eternally condemned to dragging around the ill doings of his life. Nearly everything will remind us of the losses and the painful feelings associated with them. Once those feelings take hold, we're in a state to create losses. What we must do is disconnect our current anchors from the old associations through transformation of our present way of thinking. Disconnect anchors for old associations. First, be aware of loss associations. First, you have to be aware of the things which you now associate with loss. If you think about it, you'll be able to uncover these anchors. They are the sights, sounds, the things, the words, the smells which bring you down, which make you sad, which make you uncomfortable, and you have no rational reason for these feelings. Another way to uncover them is to recreate in your mind's eye the losses that are painful to you and note the particular details that stand out for you, which ones seem to represent the experience. Then you want to uncouple the loss anchors. The next step is to uncouple these anchors so that they aren't creating the feelings of loss each time you encounter them. This can be done by replacing these anchors with new associations. For example, if you associate December with losing money because you once lost a great deal of money in December and you find yourself repeating losses at that time of year, you need to unlink that association. So close your eyes, you could do that now, and imagine that the most rewarding trade you can think of, one which will create a high charge of emotion in you. Now imagine that trade taking place in December. For this process to work, you must imagine it vividly, and the emotional charge must be very high. The more you repeat the process, the more effective this process will be for you. In other words, you're creating a new anchor. So now you want to install the anchor. Oops, sorry. The last step is to replace the old anchor with a new one. Think back to a time when something really inspired or motivated you. A trading book you read, a trader you mentored, the big lesson you learned, until you experience sensations that feel good. And think of one word description that describes that feeling or emotion. Repetition is important to setting strong anchors so that only your word description is enough to bring you in the desired state. Just think of how many times you repeated and repeated the negative anchor. Well, in order to get to a positive anchor, you have to repeat it and repeat it. The good thing is that you can repeat it in your mind and you don't have to do it while you're trading, so that you want to get to a point that it feels uncomfortable not to do the right thing. Put up the next slide by mistake, but that's okay. I want to talk to you about levels of coaching so you understand the difference. There's a conscious level of coaching which I'm giving you now. I'm giving you a way of overcoming the anchors of loss. Now, some people will take that advice and will report to me back that just by doing that, they're making tremendous profits. And when you read a book, when you listen to tapes, it's mostly on a conscious level. Then there's the subconscious level. This is what I do in my seminars and in my private work. This is where I'm working on a conscious level with you, and you're in a subconscious state. In a subconscious state, you're taking in 24,000 bits of information, as opposed to a conscious level where you're only taking in 8 to 10 bits of information. Then there's the energetic and spiritual and superconscious level. This is what I do in my private work when people physically come to see me. This is very deep work. It's very, very fast and very effective work. And if that's what you need and you're very passionate about it, well, then you'll invest in yourself in in this type of work. So where is your focus? Your brain will focus on what you are interested in, what you value, and what you expect to happen. Ask yourself the question, what results would I achieve if I were to trade my plan consistently without unnecessary losses? Ask yourself this question, what is it costing me by not doing whatever is necessary to overcome my issues? Okay, at this point in time, I'm ready to take your questions. And very often, questions don't come up right away. So I'm going to give you my short commercial now. And if I still don't hear from Eric with questions, what I'll do is I have this big fishbowl, and I'll pull a question out of it. Over the years, over 25 years, I've just written down a whole bunch of questions people have asked. And I will ask myself the question and I will answer the question. But if you want a personal question answered from me, then you will write on the messages a question to me. So here's my commercial. I have a home study course. The home study course online is normally $600. Those who are listening into the recast, if you order, I usually say by Friday, but because I usually do these on Monday and Tuesday, if you order by next Monday, I will give you a $50 discount. You won't see the discount online, so just say you want it, and I'll send you a PayPal. Also, give me your name and address. The course has Winning Edge 1, 2, 3, and 4. This is all about every sabotage issue that I've ever heard of in trading and how you can overcome it yourself. There is an evaluation and consultation with me on the phone. There's no wrong or right answer. It's how you feel about it. And that is worth a few $100s right there, because I can tell you where the problems are and what you need to do about them. You can see there's a lot more. There's a CD to get you to be on the right frame of mind for trading. There is a CD to put you to sleep at night and get you through various other emotional issues. And you can see there's a business plan for trading. It took me 12 years to put that together. So when I asked people, what's your rules for entry, what's your rules for exit, and when there were no more answers, then I knew I had a book. Only a couple more advertisements. I used to sell more than one package. I'm only selling one package now. This package is $250 online. If you order by Monday, the price would be $150. That has the trader's evaluation. It has trader secrets and stress relief for traders. There, my top performance seminar. I usually do it for institutions now and groups, and if you're interested in that, that we can do online, so you don't have to travel any place. And the last thing that I'm going to advertise is a webinar I do on Saturdays. I don't have any date set right now. Early enrollment is $300 when I don't have a date, and when I give you a date, it's $500. And that's how to get in touch with me. So Eric, I'm going to ask you, are there any questions? Eric, are you there? Anybody there? Maybe Eric is not there right now.
Hi, Adrienne. This is Greg, helping out Eric.
Hi,
I see a few questions. So Kirk said, "What about guilt after loss, knowing that you could have done better, and beating yourself up after a loss?"
When you feel guilty about a loss, you could ask yourself, what value is it giving you? If it gives you value to feel guilty because you're going to change the behavior, then guilt is a good thing. But for most people, guilt is not a good thing. So what you want to do is have a mental rehearsal of seeing yourself after a loss and learning from the experience by saying, okay, now what did I actually do? How could I have improved? What did I do wrong? What could I have done better? Is there anything that I need to read or listen to or ask questions of anybody? And you put this series of questions down, you write them down, and you go through those series of questions, and it'll help you with the guilt. Sometimes guilt is so deep-seated that you need to go to a subconscious level, and the advice I just gave you won't work as effectively as if you handle the deeper issues. That's why I recommend my evaluation, because I can tell you where those issues are and how deep-seated they are and what you have to do about them. Next question.
Okay, the next question comes from Martin. He says, "Can you really undo anchors by yourself? I bet you must have an exceptionally strong mind and observation power without any P&L coach. Thank you."
You can overcome an anchor by yourself. I've seen it done. I've done it on myself. But it takes the kind of discipline to repeat and repeat and repeat something until it becomes a new anchor. And most people won't do that. There was a fellow in Vienna. I showed him how to improve his eyesight. He was considered clinically blind in one eye, even though he could see space, big items. And I showed him in within 10 minutes to improve his eyesight so he could see 10 times better. And he was really impressed and everything. And I said, now this is what you have to do. And I told him what to do. But did he do it? No. Very often, people say they want to change, but they're not disciplined enough to take the time to do that. I know in my own life, there are certain things that, I'd like to do on a daily basis, but I don't. And one of the reasons that people don't do things is because it's one more thing in a day. I like to put my aromatic machine on. I like to put my music on. I like to, I can tell you 20 things that I'd like to do while I'm working, and a lot of it doesn't get done. Sometimes when I have a checklist, it will, but a lot of things don't get done because it's one more thing in my life. That's why, when you step out of your world and come to, a seminar, and you work on a subconscious level, it's much, much more effective because it's instant, as opposed to trying to do it yourself and have the discipline necessary. If you commit to something and you say, I'm absolutely going to do this, and I'm going to put it on a checklist to do 10 minutes a day in the morning just before I get up for 10 minutes and go over and over and over it, yes, you will be effective, but it's a question of sticking to it. Next question.
Hey, Adrienne, this is Eric, by the way.
Yeah.
We have another question here from Mandeep. It's, how do you deal with the emotional stress of being stopped out of a trade that you were eventually right about?
Wait, how do you deal with
the emotional stress of being stopped out of a trade that you were eventually right about? Like the trade went in your direction, but you were stopped out before it went in the right direction that you wanted.
Well, one of the things that I tell my people to do is monitor trades in various ways, such as a wider stop, a narrower stop, a different time frame, a bigger time frame, a smaller time frame. And while you trade exactly the way that you've been taught to trade, but monitor these other things. I have found with some of my clients that they trade different time frames now. Maybe on a Monday and a Tuesday they trade one way, and a Wednesday and Thursday they trade another way, or Friday they don't trade, or Monday they don't trade, or they only trade a certain time of the day. Keep track of all of this while you're trading. It gives you something to do, and it gives you more confidence in your ability to take charge of the trades, as opposed to be a victim of being stopped out. And when you feel like a victim of being stopped out, even though you see where it's going, think like I used to think, when I was trying to get a sale. This is one step closer to my being successful because I'm following my rules. There's always going to be a stop out. You just understand that. There'll be a certain amount of stop outs with any particular system. It's just part of the nature of things. And When you don't want to feel bad about it, then make yourself busy with doing positive things so that your head doesn't go in that direction. You could write out positive affirmations so that you don't fill your head with those negative thoughts. When you fill your head with negative thoughts, you're going to get negative emotions that respond. Any more questions?
Yeah, so John asks, do you recommend writing out a mission statement just like a small business owner?
Absolutely, absolutely. Part of my business plan, that's one of the things that I ask you to do. You don't want to get in the habit of within the mission plan to say, I'm going to make $1 million by the end of the year. What you want to do is you want to make mission statements that include your being in the process of becoming the best trader you can be, because you're going to be doing certain actions rather than saying, a specific amount. Because if you don't get to that specific amount, then what happens is you're going to feel like a loser. I used to work with a money manager. I started with him when he had $10,000 in his account, and within 6 months we worked, and he had 300 million in his account. What he did was he had like 4 or 5 systems, and his genius was he was able to pick the system that was perfect for where the trades the markets were at that particular time. He just had a feeling for it. And what you need to do is go back and look at charts and get a feeling. Ride the waves of a chart. Get the feeling of the markets themselves to the point where you hide where the market's going the next day and the next day and the next day and the next day. And you hide what's going the next day, and then you just say, this is where it's going to go. This is what's going to happen. This is where it's going to go. This is what's going to happen. This is where, and you keep doing that until you get a feel for the markets. It's very long and very tedious. I learned this from Ed Sakota, one of the market wizards. We used to do seminars together, and he used to put charts up on the wall, and he would do this hours and hours and hours. I was in Hawaii with him doing a seminar, and he's in his flip-flops and shorts, and he says, I got to make a cotton trade. I said, well, how do you know to do that? He says, I'm with the markets right now. So he didn't even have to look at charts because, and I know that sounds pretty weird, but I've been in this business for quite a while, and the best traders have that sense of the markets. So you need to get more of an intuitive feel in the markets in order for you to be able to know what to do in the markets beyond your strategy. But that takes you're not going to do that in your first couple of years trading. That takes experience. It takes a while to get to that point. Any more questions?
Guys, if you have any other questions, feel free to type it out now. But if not, then I want to say thank you so much, Adrienne, for joining us. It was a really great presentation. I think everyone should focus on this aspect of trading and managing your emotions and your own psychology, and working on not letting it stop you, not letting this fear or worry stop your trading. And it's a great topic to talk about. So thank you, Adrienne.
Well, thank you, Eric. Thank all the people at Cyber Trading University. And one thing I know that you offer something that is very valuable to traders. You're very lucky to have honed in on the experience of Cyber Trading University, because there aren't that many people out there that are really good, and they happen to be. If you're interested in my special, remember, send me an email with your phone number and the best time to reach you. Everybody have happy holidays. I'm going to say goodbye now. Bye, everyone.
Take care, Adrienne. Thank you so much. And guys, I put her email posted in the room. I made a little broadcast announcement. So if you want to email her, to write in the chat. Have a great day, everyone.